Thank you very much, and good afternoon, ladies and gentlemen. I welcome all of you to this earnings conference call to discuss the Q2 FY19 results. As usual, I will start out with a brief overview of the performance and the production details, and then we will go into the Q&A mode. So as far as the second quarter of FY19 is concerned, it was a somewhat difficult quarter because we had significantly lower output on account of various maintenance activities and also partly arising out of the sudden stoppage, which then resulted in shell puncture at our furnace at Tirubali. But we have been helped by significantly higher prices as well as, of course, the rupee devaluation. In as much as the numbers themselves are concerned, total income for the quarter, inclusive of other income, etc., is a shade under 400 crores at 398 crores to be precise. This is about 6% lower than the 424 crores recorded in the corresponding quarter of FY18. And in terms of EBITDA for the quarter, it stands at 51.13 crores, which is more or less the same as what was recorded in the corresponding quarter. But in this context, what I would like to point out is that in both Q1 and Q2 of the current financial year, that is FY19, we have had significant M2M mark-to-market provisioning on account of our foreign currency exposure. And this is something that I would like to dwell on a little bit after going through the rest of the numbers. So I'll come back to the MTM issue. And as far as the profit after tax is concerned, which has also been bolstered by some exceptional items, which is primarily write-back of certain expenses on account of compensatory cess for coal rejects, which, thanks to a favorable ruling in the GST Council, we have written back. So as a result of that, PAT for the quarter stands at a little more than 21 crores, which is as compared to roughly 7.4 crores in the corresponding quarter of last fiscal. In as much as production is concerned, as I mentioned, it's almost 20% lower at roughly 47,000 tons as compared to 58,400 tons in the corresponding quarter. This is, of course, a result of the largest furnace at Tirubali, which is TCP3, being out of action for most of the quarter on account of the shell puncture which happened when we restarted after the sudden shutdown. I'm glad to report that the shell relining, the shell building and the relining has been successfully completed. And the furnace is back in operation. In fact, I have just come back from a visit to Tirubali this morning, and so we have attained peak load in the furnace. In as much as power generation is concerned, it stands at 223 million units during the quarter as compared to 254, and this again is on account of the toned down requirement due to lower ferrochrome production. As far as chromo raising is concerned, we raised a little more than 1 lakh tons of ore in the quarter. In as much as sales is concerned of ferrochrome, we sold roughly 49,400 tons in the quarter, which is again lower than the 65,000 tons sold in the corresponding quarter, and clearly the lower sales are on account of lower output. But where there has been a significant improvement is in terms of realization. As compared to 62,000 rupees per ton in the corresponding quarter last fiscal, it's been almost a 30% price increase to just short of 80,000 rupees a ton realization for ferrochrome. And of course, the exchange rate, the average exchange rate, which stood at 64.33 for the corresponding quarter last fiscal, is roughly 70.5 for Q2. So let me use this as a sort of a segue to get into talking about MTM. In terms of actual foreign currency borrowing, we don't have any significant exposure, but our largest rupee loan, which is for the 120 megawatt power plant, we have done an interest rate swap into dollars for that, and as a result of which we do have dollar exposure. Therefore, we have certain M2M provisioning when you see depreciation of the rupee, which has moved sharply in the last 2 quarters or so. In as much as MTM is concerned, I would like to point out that what MTM does is captures the additional outflow on account of the dollar borrowings. But what is not reflected in MTM is the corresponding impact that we have on our earnings as a result of the rupee depreciating. Please keep in mind that 80 to 90% of our top line comes from exports, and we do follow a relatively conservative hedging strategy of not hedging more than 20 to 25% of our long-term exposure, which we define as the next 18 months on a rolling basis. So net, we stand to gain from rupee depreciation, even if there is an MTM impact. And as I said, the MTM impact is captured, but not the benefit of the rupee depreciation. There is a second element to having converted our rupee borrowings or a lot of our rupee borrowings to dollar terms, where clearly the interest rate, even with the Fed rates moving up over the last 2-3 years, even then we have had significant savings. And in fact, at a broad level, having converted the rupee loan for the 120 megawatt power plant into dollar terms by an interest rate swap, in the last 3.5 years, which is starting from FY14-15 till the current, H1 of 18-19, so roughly about 3.5 years, we have had a net savings of about 60 crores on account of lower interest rates. So this is something that, these are measures which are not reflected in the immediate quarterly numbers, and therefore I would urge you to dive a little deeper into the numbers as opposed to just looking at them at a macro level or at a macro level is, I think, the best way to describe it actually. In terms of to finally round up the numbers in terms of our costing for ferrochrome, that has moved up marginally to about by about 6% to just short of 60,000 rupees a ton as compared to 56,000 rupees a ton. But in as much as variable cost of power generation is concerned, that's fallen by about 3.5% to 3 rupees 89 paisa. So net we have shared all the numbers, and I think with this we'd like to move into the Q&A phase. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Siddharth Mehta, an individual investor. Please go ahead.
Yes, I have a different kind of a question. I have been a shareholder for the company for a few years, and I've always been admiring how well our company is doing. We have been making good margins. We've got good opportunities. We've got a good future. But at the same time, when we look at the stock price, it gets worse and worse. And clearly, this does not reflect the performance of the company, and this has been happening now over a long period of time. So do you feel that this needs an investigation by SEBI or somebody as to what hanky-panky is being played in the stock price?
Mr. Mehta, I can't really comment on that, but generally what I would say is that I think equity markets have been affected by turmoil, both as a result of oil prices, as a result of Middle East tensions. There are a variety of factors at play, and of course, in as much as the Indian market is concerned, whatever issues you have had with the NBFC sector and all of those things, it sort of has
No, sorry to interrupt, but these are all immediate concerns that you have pointed out that has started in September. The market started falling in September-October period.
Right.
I am talking about the last two years or so. The stock price has not reflected the fundamentals of the company. See, in the long term, the stock price always reflects the fundamental of the company. In the short term, it can fluctuate.
Right.
Okay. But in our case, even in the long term, the stock price is not reflecting the fundamentals of the company. So clearly something is a little strange here. So my question is, should one ask SEBI to investigate?
I wouldn't really like to comment on that. I can't really say much about it.
Thank you. The next question is from the line of Falguni Datta from Jet 8 Securities. Please go ahead.
Yes, I just missed on the sales volume.
Yes, Falguni. As far as the sales volume is concerned, the number for the quarter was about 49,400 tons.
Okay. And sir, generally, what's our outlook on prices? Though it's difficult to call, but still on ferrochrome prices.
See, in as much as prices are concerned, let me give you a brief overview, and then Jayant Mishra, CEO, can step in. But as I have been saying for the last 2 or 3 conference calls, there has been quite a bit of fluctuation in ferrochrome prices. In fact, something we haven't really seen in the 25 years that I have been in the business, where every quarter we are seeing, we are seeing a price movement of 20, 30 cents upwards or downwards. But fortunately, that has, that sort of volatility is narrowing a little bit. As I mentioned, average realization for the quarter was, for Q2 was just under 80,000 rupees a ton. And in as much as price finalization for the ongoing third quarter is concerned, we are also seeing it above 80,000. And we given a variety of factors, including ore stock at Chinese ports and all that, we do expect, stability in ferrochrome prices. With there will be volatility, but hopefully not what we have seen in the last 5 to 6 quarters. Jayant, if you can just dwell on the details a little bit on this.
Yes, this is the volatility in the price is something which cannot be wished away in our market for a couple of reasons. If we were to discuss few reasons, one is we have a steady demand coming from the consuming sector, which is the stainless steel sector. Okay, so that's the only thing which is probably stable, with a CAGR growth of about 6%, 5.56%, and this year again we are seeing good global stainless steel output for the calendar year, which is normally reported. We will have a sinusoidal curve of a price happening all the time. For example, if you see this quarter, which is the October-December quarter, and go back 4 quarters, we have again come back to square one. We started with 126 cents benchmark price, went up to 150, then 146, back to 132. So this kind of thing is expected to happen because the things which also move quite a bit is the chrome ore stock in China. When that goes down, the prices, the sellers have a upper hand, and the ferrochrome prices go up. And then the pollution checks in China, which suddenly takes out a lot of production in ferrochrome in China, then the prices move up.
Okay.
Then if there is a supply side issue in South Africa, like electricity issue, then prices move up. If there is sanctions and anti-dumping duty, then the prices are affected and slightly go down. And the currency fluctuation also has a bearing on our market because this product has always been denominated in dollars and cents. So the strong dollar and the weak dollar makes some impact on the price. So having said that, we are hitting an average of about 82 to 85 cents, which translates at today's currency rate to 78 to 80,000 rupees. And we expect this will stay in the same region. But a real forecast on a quarter-to-quarter basis is best avoided, is our experience.
Yes, sir. Sir, not on quarter-on-quarter basis. Generally, I was saying over a year, do you see any meaningful decline in prices? That's all.
No, Falguni, we don't see any significant decline, barring unforeseen circumstances, which I don't think there are any on the horizon. And just to dwell on something that we have mentioned in previous concalls, that over 5 or 10 years, what we have seen is that there is a certain band of prices which are realistic, and at present I would term that to be anywhere between 85 to 90 cents is a realistic price range. And if you see prices significantly lower than 85, you see a bounce back. and if you see prices significantly higher than 90 cents, we see a reverse of that. So as long as the volatility is not much beyond this band, we don't you will not see too much of a swing. But as we have always said, I think we have a certain standing as a in terms of being very competitive in as much as the cost curve of all our peers is concerned. And the only strategy in a volatile industry is to plan to be the last man standing.
Thank you, sir. That's all from my side.
Thank you.
Thank you. A reminder to the participants, to ask a question, please press star, then 1. The next question is from the line of Salil Utagi from Edelweiss Securities. Please go ahead.
Yeah. Good afternoon, sir.
Good afternoon, Salil.
Sir, to dwell more on this M2M losses, in the annual report, you have mentioned that 5% changes in USD will impact around 11% in terms of PBT, loss or profit. That's sensitivity. So YOY we have lost. Rupee has depreciated by around 10%, more than 10% actually. So does that mean that 22 to 23% of our profits are actually lost and not these are actual operational numbers rather than M2M losses?
I haven't fully understood your question, but see again, what I want to dwell on MTM is that if you look at H1 of FY19, in the MTM is about 90. Okay. Now, out of that, the actual, the difference between, let's say, a PCFC drawing and PCFC being settled and all that is only a portion of it. And the rest is what is essentially a notional charge. And again, what I would say is that what is not reflected, I mean, you are only seeing the negative side of MTM, or a foreign exchange exposure. What is not reflected is the other angle. Because with a production of 47,000 tons, to be able to more or less have the same level of turnover and as a quarter where we had close to 60,000 tons of production, basically that is the impact of currency depreciation, right? So, but that gets lost in the picture because you have one line item saying MTM in terms of provisioning. So I haven't fully understood your question as to whether we are reflecting a loss. If you could try to ask that again,
So basically, what I wanted to understand is that because top line is actually accounting for depreciation of rupee.
Right.
So similarly, our costs are also getting realized, right? These are operational numbers. These will only be reversed if rupee comes below 70 or again back to 65 levels.
Right.
Otherwise, we will be recognizing this as expenses.
Right.
And
no, in fact, we are already provisioning for it as an expense, right?
Right.
Now, the point I'm trying to make is that if the rupee stayed at 65 or 67, okay,
right,
then what would happen is that you wouldn't have 90 crores of MTM in the first half, right?
Yes.
But to that extent, your top line would also be reducing, and given that we have a net. We have an exposure of not more than 25-30%. I mean, in the short term, for example, in the ongoing quarter, we have hedged about 60 to 65% of our earnings, not 25%. But if you take a longer term average, we have hedged not more than 20% of our earnings, right? So if the rupee, for example, were to reverse back to 67 or 68, then MTM would not be there. But to that extent, the top line also takes a hit, and in fact, on a net basis, we will be worse off.
Okay. So in this year, actual cash outflow will not be 90 crores, will be much less, right? It is just the accounting entry that we have made in H1.
Right, and if the rupee stays at these levels, this accounting entry will go as an expense. But again, what you need to understand is that given that we are only hedging 25% of our future earnings, that despite every MTM, I mean, we lose on 25% that we have hedged, but the 75% which is open, we benefit from that.
Right. And sir, if I can know what is the rate that we have fixed, because if the rupee suppose goes to 80, then there will be further impact. So how much, what is the rate that we have fixed for this swap?
So it's not a rate which is fixed for the swap. Prem, can you just explain?
No, it is that rate of 70.46 what you have mentioned.
Okay.
The September ending rate, which is 70.46.
Okay.
That is the rate. At that rate, we have converted the entire forex outstanding.
Okay. But this was done sometime back, right?
No. I think, Prem, you're answering, he's asking a different question, which is that what is the rate at which we have done the rupee swap? I think that's close to about 67 or something, right? Or 68?
That was done in 14-15 at around at around 63. 63, 64.
Okay.
Yeah.
Okay. So that's why you have gained around 60 crores net. That's what you mentioned.
That despite the fact that the rupee has slipped from 63 to 73, the fact that the rupee loan is at about what, Prem, 11% or 11.5?
11.5.
Whereas with the swap we are down to roughly about 5%.
Yeah.
Okay. And how much is the amount of this loan in rupee terms?
As of now, outstanding is around 290 crore.
Okay. So only the loan taken for the power plant?
Yes. Part of that we had converted. So we had converted around 350 crore out of that. And 290 is outstanding.
Okay. And so my second question is on the cost front. The costs have again gone up to close, higher than Q1. So, power cost has come down. So, what is the element which has increased? Is it the coke or other expenses?
Deepak, would you answer that, please?
Actually, the price has gone up only because of the coke price, which has moved up by $100. If you take the average for the last time as well as the present, it's little more than $100 change. And we use around 600 kgs, so around $60 change, which means around 3,000 to 4,000 rupees per ton has gone up. That is the thing.
What was the average cost for coke? What was the average of coke cost?
When? At the moment?
For Q2?
For Q2, it will be something like 350.
And has it changed right now?
No. Now it is more or less stable, although there is little pressure on coke steel, because stainless steel also is being produced at a higher rate and going to reach 50 million this year. So coke is in tightness, and it was going up primarily because of the oil price going up.
Right.
So which has been arrested at the moment and has already Brent and WTI has come down quite a bit. So based on oil price also rates will be different for India, so accordingly it will move up, but at the moment more or less steady in that range.
Okay, so Q3 cost will be around this level only?
Yeah.
For, entire cost of production will be close to 60,000?
More or less, that's what we expect.
Okay. And sir, the last question is on Utkal Coal Limited. So I read the declaration. So just wanted to understand more on this matter.
Okay. So just to remind everybody, so basically, the Utkal C coal block was allocated to UCL, which is a subsidiary of the company. And when the coal block cancellations happened, at that point in time, in terms of compensation, the ordinance and later the act said that only land which is owned by the coal block allotees will be compensated. Whereas in Odisha, there is a restriction on owning the land. We can only lease the land. So we actually pay for the land, pay to a state government entity which buys the land and leases it to not just us but all the allotees in their respective areas. So as a result of which, leased land was not included for compensation. So that is actually illogical, and that was taken up in the Delhi High Court, and the Delhi High Court basically acknowledged that there is a need to compensate this, but because there was a little lack of clarity on the exact contours of the judgment, we had gone to the Honorable Supreme Court. Now, basically, in the meantime, what has happened is that the Ministry of Coal, Government of India has asked us and others to give details of leased land, which was part of the coal block allocation. So we can only presume that it is with a view to compensate to correct the mistake and compensate for leased land. So accordingly, since we no longer have a cause of action, that's what we were advised by the legal team. So we have withdrawn the SLPs filed before the Supreme Court. We understand that the Utkal C coal block has been now kept for captive consumption requirement of PSUs, and that allocation process is underway. We were, I think originally it was probably supposed to be over by about middle of October. It's dragging on a little bit, taking a little bit more time, but we expect that to be finalized soon. And with that, it's only when a new allotment is made that the old earlier allottee will get paid. So we are waiting to get details of the exact nature of compensation.
Okay, but the compensation will be regarding only to the land.
That's right. That for leased land and of course some amount of mines infrastructure and all that.
Okay. Yeah. Okay, sir. Thanks a lot.
Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Kalpesh Parekh from Prabhudas Lilladher. Please go ahead.
Yes, sir. Hi. Sir, you mentioned that probably for this quarter the volumes were 49,500 tons as such. So, what would be, are we there on track for last year's volume at least, something like 235,000, or probably will there be any slippage on that front?
No, there will be a slippage on that, Kalpesh. We have in fact shared that in the previous calls. So basically, as you know, there was a shutdown, unplanned shutdown of about 18 days in April due to agitation by outsiders, and so there was production loss during that period. And secondly, when we restarted the furnaces, while the smaller ones came back on smoothly, the larger furnace had a shell puncture, as a result of which we had a outage for about 4 months. So net, we had provided a guidance of 2.35 lakh tons for FY19, but we will broadly be losing about 15 to 20,000 tons. Actually, I think we had given 2.39 if I'm not mistaken. So broadly about 20,000 tons output loss is there. So our revised guidance, which we had mentioned earlier, is between 2.15 to 2.2 lakh tons for the current year.
Okay, but we would be on track for achieving that because
we are on track for that.
Okay, and secondly, sir, with this U.S.-China trade war type of intensifying, do you foresee any demand-related impact because of all this thing, particularly on the currency front or something like that for you particularly?
No, we are not seeing anything. Kalpesh, before I just again with reference to your last question, the H1 production of ferrochrome is roughly 94,000 tons. Okay, and broadly we are looking at about 60,000 in the current quarter and maybe about 65,000 in the final quarter. So that takes us. So as I said, the broad guidance is 250 has been revised onwards to 215 to 220,000 tons. Now, in as much as as your question about the trade war and all that is concerned, no, we are not. Given our level of output and the fact that we have long-term contracts and joint venture agreements in place, we have no concerns at all about placing the products.
Particularly, my question was more on this ferrochrome prices globally also. Are you people seeing any more fluctuation on the same or nothing major? Yours is very dependent on South Africa, more dependent on China as such. So that is the reason of some worry.
Right, but the factor in as much as South Africa is concerned is actually more the rand versus dollar exchange rates than anything else, and that has. I mean, in fact, if you look at the rupee depreciation with the fall to about 73 levels, we are or 14-15% for the year. We are actually have caught up with sort of the level of currency depreciation that South Africa has had, and the rand seems to be holding steady. And in as much as China is concerned, we are not. At this point in time, not seeing any impact. the trade war in terms of stainless steel or carry through impact onto ferrochrome.
Okay, sir. Wish you all the best.
Thank you.
Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yeah, good afternoon, friends, and thank you for the opportunity. Sir, as Mr. Pandey just elaborated that 60,000 and 65,000 should be our sales target for the December and March quarter respectively. So H2 will be prominently looking much better because the price realizations will also kick in at the higher rate, as well as the volume pickup will also be there. That is a fair understanding?
Saket, that's absolutely a fair understanding that, in H1 we have had both the issue of lower output and therefore lower sales, and secondly you have also had the M2M impact. And going ahead, if rupee holds at these levels, which we think is likely because oil is also starting to ease off, then going ahead you wouldn't, you have higher output, higher production, higher sales. Hopefully prices stay the same or improve, and you don't have the MTM impact because please again keep in mind that a large chunk of the MTM is actually non-cash. It's not an outflow. It's a mark-to-mark provisioning. It is not an outflow. I mean, it's conceptually somewhat similar to depreciation, but I mean, of course, depreciation has other advantages here. If as one of the earlier questions was, that if the rupee stays at this level, then clearly this provisioning will result into an actual expense. But again, rupee staying at this level also has an impact in terms of higher top line and bottom line, higher margins.
Right, sir. So, sir, at the time of hypothetically at the time of dividend payout, then this actual cash outflow, which is not to the tune of 90 crore, how will the management take into account the dividend payout ratio for the current year? Because this is a very substantial amount that is knocking off the P&L. So how are you going to consider this amount when you will be factoring in
when we look at dividend payouts, Saket, what we look at is, I mean, clearly it is the starting point is what is the profitability and then the next point is what are the alternate use of the cash, and we believe in striking a balance between conserving cash for operational requirements as well as potential acquisitions, and that is very much on the card still. I mean, there are a few opportunities in NCLT and more which are expected to come. So we would clearly conserve some cash for that, but we also believe in striking a balance and rewarding shareholders. So I mean, the starting point is profitability, but clearly the cash on the books and what is the use for it in terms or requirement in terms of operational as well as potential acquisitions or paring down debt is what we keep in mind. And speaking of debt, something that I would like to point out, that if we look at long-term debt, we are now at a little more than 600 crores, 607 to be precise, and a debt equity of 0.48. So we are really financially in a good position.
Okay, sir. And what are the repayments for this year, sir?
Prem, would you please dwell on that?
This year it will be around 130 crore, so balance say around another 60 crore for the current year.
Total was 138.
130 total, yeah.
130, and out of which 60 has been paid off.
70 has been paid off, and another 60 we have to pay.
Another 60 we have to pay.
Yeah.
Sir, if we come to this segmental point, sir, how should one read this power segment? Because we are booking revenue on one side and only losses are to be booked, sir. How the reporting is there in this form? How should one investor read into this segmental reporting for us?
So, power we are doing at cost price, the transfer price. But the loss what you are seeing is because of the inadvertent power we are pushing to the grid. So that loss is coming here, but actually we are not selling power, so the power is getting transferred at cost to the division, to the ferro alloy division.
Okay. And then from the grid part, sir, I could not get the point. Come again, sir.
So basically the point here is that, as per accounting standards, I mean, you cannot recognize internal, inter-unit transfers as, at anything other than cost. So basically, our alternate to buying power from the grid would be probably at about 6 rupees, whereas here, all in, we are in the range of 540, 550, something of that sort. But so we transfer it at cost. We are constrained by accounting standards from accounting for the transfer at let's say market rates and booking profit in the power division. So essentially, the power is transferred at cost and at the cost of generation. The somewhat negative numbers that you see from time to time is because of some power which gets pushed into the grid. If it is inadvertent power, then you don't get paid for it. So that's a loss that
that's the loss of paying there.
Okay, and so the same goes for the mining part also, sir. How should one read into that?
The mining is clearly transfers are at cost.
Transfer at cost.
Yeah.
Okay, sir. If we take a look at your competitors also, not traditionally speaking competitors, people like Metals Alloy and all, they are wholesale trader only. They are not having any mines and all, but their returns are better in this ferrochrome business I'm talking. So have you taken a look, sir, exactly what right they are doing that they are able to deliver?
Well, I don't know how much of ferrochrome they make because to the best of my knowledge, more of their business is manganese alloys.
Okay. They have foray into ferrochrome also and setting up a furnace at your location nearby the Orissa only. So I just thought they must have worked the numbers since they are this one of your competitors and also having an advantage in trading. Just wanted to understand they are doing it with the ore trading itself. We are having our own ore,
right?
And the translation. Just wanted to understand how does the translation happen for people those who are not having their own ore itself. They are moving into the business and depending upon ore availability and the pricing. And we are getting ore at a big price differential. So just wanted your understanding on the same, sir.
Well, I can't really comment on others' business models, but as I said, to the best of my knowledge, they're more into manganese alloys than chrome. So, okay. And in any case, as I said, it wouldn't be correct of me to comment on others' business models.
Right. And my last question, sir, for this quarter, what have been the price fixed at? And what is the discount?
So we don't get into the exact pricing details, but broadly prices are at holding at levels that we have reflected in Q2 numbers and shared with you.
Okay. Q2 there in the Q3 also, sir. And how much is what total quantity is fixed and how much is depending upon the market, open market prices?
Practically most of our quantity is against either long-term contracts or spot transactions. Spot transactions are very little.
Very little. Okay. All the best, sir. Thank you.
Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Tanmay Sarkar, an individual investor. Please go ahead.
Good afternoon, Subrakant. Good afternoon, gentlemen.
Good afternoon.
Thanks for this opportunity. Firstly, I would like to congratulate about the activities in Ferro Alloys that I just saw yesterday. Something very good. In that connection, I have a question. Is everything all right in other places like in the mines and in the main plant?
Yes, everything is fine. Thank you.
Everything is fine. Okay. Another issue regarding coal. Could you please help us understand, like the competition part? You paid the money to some state government entity,
right?
And you are supposed to be getting that back from that entity, right?
No, actually, what happens is that the new allottee of the coal block has to compensate the old allottee, the previous allottee.
In the meantime, somebody else was allotted.
Not yet allotted. Utkal C is not yet allotted to anyone.
Monet Ispat had got that?
They had got that, then they gave it up, and now the end use has been reserved for captive requirement of PSUs.
So Monetis part, although they got it, but they didn't use it, so they didn't pay up anything.
No, I mean, before the allotment process was complete, they gave it up.
Okay. Now regarding this MTM loss, I can understand your rationale that you are getting a high revenue due to depreciated rupee. Now, what I am at loss to understand is when rupee depreciates, all the exports are supposed to make net profits, high net profits. Now, that's what is missing. Is it a fact, is it something to conclude that if rupee goes up, we'll make losses, less profits?
No, that is absolutely not the case. As I have said repeatedly, that on a net basis over the long term, our exposure is no more than 20 to 25%, and therefore, whatever rate we have frozen through hedging, through swaps, etc. So it's all net of everything else. So after considering our payouts for, let's say, for imports, after considering the interest swap, everything else, on a net exposure basis, we hedge not more than 20-25%. So a large portion of our earnings is still open to benefit from the rupee depreciation. That is number one. The point what you are seeing here is that you are seeing in a quarter or 2 quarters where your output has not been high, and in Q1 the prices were not so good, in Q2 the prices were better, but we didn't have the volumes to take benefit of that, because all other things being the same in this quarter, if you had 60,000 tons of output or sales as opposed to 49,000, that extra 10-11,000 tons is pure cream, which was missing. Now that has nothing to do with rupee depreciation. But we can't really hold back tonnage to sell or do this, because we have regular business with regular clientele, and we have to honor our quantity commitments to the best extent.
Mm-hmm.
So it is not at all a case that with a rising rupee or a depreciating rupee we will lose money. We will always benefit, but the precondition of that is actually that the volume has to be there, which this quarter the volume wasn't there simply because of the shell puncture and therefore the tonnage loss.
Okay. Now coming back to the volume. We have started calculating, you will also notice that we have started calculating from 240, 235 range, and then deducting, let's say, 20,000 tons or 25,000 tons from there and reaching 215 to 220 K per annum. My question is, if our capacity is 275 K per annum, why are we benchmarking ourselves to 235, 240? Is it not possible to make, that kind of the last 10-15%?
No, that it is definitely possible, except that we had, there was a planned relining which was supposed to happen in any case. In fact, in this quarter, we will be taking a smaller furnace off for relining for about 35-40 days. So, 100% is possible only if you have zero production loss at any point in time, which simply cannot happen, because every month we will take, Jayant, what do we take, about a couple of days of preventive maintenance in any case?
Yeah, this 240,000 tons, what we projected at the beginning of the year and thereabouts, over 275 actually translates to a 90% plant load factor, which is very normal under very good circumstances. So now that we are coming down to 215 to 220, actually closer to 220, the PLF will come down substantially, and that's because of specific current regions. Otherwise, 240 is actually a good actual production out of a capacity of 275,000. Okay. So about 10% less than the 100% thing is... 85-90% PLF is a very good capacity utilization. Okay. Now, if I calculate the total number of tonnage that have been sold in H1, I think it works out to be around 87,000 tons. Am I correct?
I'll need to just check.
Kind of.
98,000.
Now, if you check the annual report, there was, I think, about 17,000 tons of finished products, ferrochrome, in the inventory. I'm trying to understand if that part has been sold, it seems it has not, because this time you have produced 47, you have sold 49, that's 2,000 extra. And last time also it was like that. So 17,000 tons of finished ferrochrome is not yet placed, I suppose. Is it correct?
No, we obviously need to carry some stock because we can't be operating on zero inventory. So but yeah, inventory has come down substantially because even though the production was 47,000 tons, we can't go down that much. So inventory has sort of come down to about 4,000 ton levels to be precise, in fact. Whereas normally we would carry about at least 30 to 40 days of inventory, finished goods inventory.
Okay. My last question.
Actually, production is also around 94,000, not 80,000. 17,000 is not the correct figure that we have written up from the stock. Production is 94,000 around and sales is 98,000. 4,000.
That's what is my point. So 4,000 is extra sold from the inventory, yes. And original inventory on 1st of April was 17,000, around that. So it has come down to 13,000, let's say. Anyway, my last question, could you please throw some light on your bid on the NCLT thing that is going on right now about Ferro Alloys Corporation?
I'm sorry, I would not be able to do that because of confidentiality reasons. Can't really discuss that.
Okay, then I understand. Thank you. Thank you very much.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Thank you again for the opportunity. Sir, firstly, sir, if you could dwell much more about how are you seeing this business environment shaping up for the industry as a whole? Barring this volatility, how are you seeing the demand and supply part playing out for this year as well as going forward? How are you? What is the reality on the ground?
Jayant, would you like to take this question, please?
Yeah, business environment is what we are seeing from last couple of years is getting the stability in the business environment is increasing. In fact, the only spikes or troughs that we have had was related to the reasons I explained earlier during this concall, which is we have to look at it at a little perspective, and always the past few quarters and few years gives us a good idea of what's going to happen in future. We had very good prices in excess of $1, $1.10 when there was a problem in China with respect to pollution curbs and production cuts and things like that. And we hit the lowest numbers when this ore stock level in China was very high. And so these are the two factors which normally fix the boundary conditions. So we don't see that happening now, as a result of which last couple of years we are seeing an improvement in the average price realization that is happening from about 75 in FY16 to about 85 in FY17 to about 90 in FY18. That kind of thing is going on. So we are seeing more stability and we are expecting this thing to continue because the demand side, like I mentioned earlier, is quite stable. In fact, the stainless steel growth, CAGR is reporting good numbers, and this year is probably going to report a very high number of growth with the global stainless steel production touching about 50 million tons. So business environment, as far as we can look into the future, looks very stable.
Those two factors that created the highs and lows for the industry, how are those two factors today balanced? Both for the ore part I missed it, both for the China part as well as for the South African part. How are these two players positioned as of now, sir?
Right in the middle. Actually, the Chinese ore is a very stable, about 2.5 million. People can...
No, about 2.9 million, if I'm not mistaken, stock.
Okay. So, that's a comfortable level for everybody, which is where we expect the prices to remain stable. It's not very high, not very low. When there's ore, if you remember earlier discussions, ore stock went below 1 million tons, is when we hit the highest number in market price. Okay. So this is kind of a moderate number. And regarding Chinese production, it's also quite stable.
Okay, and for about the South Africans, sir, how is the news flow from there? How can that play the price?
South African factor, which is most important today for us, is the exchange rate of rand, which is today currently the per could be
13.5 around.
No, not 13.5, 14.5.
So that's also a very moderate number for us, which is we are used to. And so hence we don't see that affecting the market price unless it devalues a lot more and becomes 16 or 18 something.
And just to supplement that answer, also the other important factor in South Africa is that you have had a significant amount of business consolidation. So a large part of the capacity now is between just two players, which is Glencore Xstrata and Samancor. So that also provides a certain element of stability on its own.
So that 14.5 is the currency against the dollar.
That's right. Yeah.
$1 is equal to 14.5 rand.
That's right, broadly.
Okay. And last point is that you said that matter for NCLT won't be discussed, and it is very true on your part. But barring said that, what are we? How are we shaping ourselves in terms of in terms of higher top lines going forward for FY20 and 21? What are the things in place, and how well are we positioned to capitalize on the same?
Clearly there are certain opportunities in due to the IBC provisions and all that we are keenly observing and will be interested in that. As I said, I can't get specifically more into details, but you have to look at the balance sheet holistically, where as compared to many of our peers, we have a very very strong balance sheet in terms of low debt and low gearing. So debt equity, as I said, is less than 0.5 at the moment. In terms of debt to EBITDA levels, also we are very well positioned. And secondly, as and when any acquisition opportunity becomes available and can be fructified, we have the ability to take that forward. But beyond that, situation is in a little bit of flux, so it's difficult to lay out longer-term plans. But clearly, we are open to opportunities and are examining them.
That means that there is no CWIP, there is no capital work in progress as of now. For the next year as a whole, no new or production or something is going to come up. If nothing happens on that front, FY19 is also, FY20 is also going to look the same on ground of production than what FY19 is. That is what my...
No, FY20 should be higher because, we have had production losses this year, which we do not anticipate going ahead to happen.
No, sir, I'm talking about the nameplate only, sir. First of all, 275...
Nameplate remains the same, yes.
Nameplate remains the same, and then the operational efficiencies and God forbid any problem, then things will improve on that front.
Yes.
Right, sir, we are looking for a much better second half as of now. That is the key message I'm going to conclude.
Absolutely, Saket. We are looking at a better second half, and even as far as Q2 numbers are concerned, I would urge you to go beyond just the basics and dig a little deeper, because what seems like muted numbers actually relative to where the cards we were dealt in terms of lower output and and the effect of MTM, I think the numbers are quite good if you dig a little deeper.
Yes, sir, because the fixed cost would have been the same, sir, if you take the Q1 part into consideration. There was an MTM of 45 crore only, right. But the PAT level was 44. So had this production loss not been there, we would have been narrowing somewhere there in that region only.
Yeah, and some amount of production loss would have happened because the relining was going to happen in any case, but unfortunately the unplanned shutdown led to a longer period of outage than should have been the case.
So the volume for first quarter was 55, if I'm not wrong?
Sorry, I just need to open up the file. Give me half a second. Sales volume or production volume?
Yes, both if you could give once again.
Okay, production for Q1 was roughly 46,700 tons, and for Q2 is 47,000 tons. Sales was 48,500 and 49,500, 49,400.
For this quarter it is 49,400.
Right.
So, sir, then the sales realizations were higher. That means the pricing was fixed at the higher price. We were at
no, in fact, you see, that's the point. If you look at realization, that is the point. If you look at realization in Q1, it was about 86,000 rupees a ton, which for Q2 is broadly at about 80,000 rupees a ton.
So the realization have gone down by 6,000 rupees.
Right. And for Q3, we're expecting it to bounce back a little bit.
Maybe in the 82,000 band. But it will not be matching the first quarter numbers.
No.
As of now.
Not likely, no.
As of now. But there is a catch up on the volume front, and then the fixed cost and the variable cost play will come into. Hopefully with rupee being stable at these levels, because after 14-15% depreciation, we don't expect further depreciation of the rupee, so you won't even have the NPM impact going ahead. Right. So all things should fall in place now.
We can only keep our fingers crossed.
Yes, sir. Lord Jagannath there is there for us.
Thank you very much. I appreciate it.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Shubhrakant Panda for closing comments.
Thank you, and thank you all for the interest that you take in joining us for the investor concalls, and we appreciate your questions. And I would just once again repeat what I told the last gentleman, which is that kindly look at these numbers from a larger perspective and dig a little deeper instead of looking at only the simplistic view of what is the top line and what is the bottom line, because I think there is a lot of strength in the business model that we have created. Quarter-on-quarter fluctuation of volatility is not the be-all and end-all. With these words, I thank you again. A good day.